Hello and welcome to Wyckoff Training Academy. I got requests from many students pertaining to what the course outcome would look like. So, for that purpose, I have planned this small presentation. What after completion of the course, what your course would look like. So, just give me a minute. So in today's session, what I would be doing is I would be focusing on making my presentation more towards what outcome you can expect out of this particular course. Just give me a moment. So this is the course outline. This course is basically divided into, initially it was divided into 4 weeks: week 1, week 2, week 3, week 4, and week 5. So I came across many students, Indian and international. They're having some doubt pertaining to what exactly would look like after completion of this course. What would be the outcome and what sort of Wyckoff analysis we would be able to do. So for that, I've applied whatever principles I'm going to teach you. Applied some of them on the chart so that you'll be able to make the difference. How and like before and after the course, what would be your difference? So what I'll be covering all this content in this particular course of 4 weeks. I've planned it for 10 days, but I'm getting some request for taking it on weekly basis. So if that is the case, then we can work on weekly basis also, because this is the final course which I would be delivering on, or which I'm taking on like this much of costing, because this costing of this course has increased to $500. That goes around, like, it comes around 41 or 42K, 42,000 in Indian rupees. So without wasting any time, we jump directly to the chart. So you'll be in a better position to do the differentiation. So, okay, let me bring up. So for sake of understanding, I have taken 15 minutes. So let me hide some points. So this is XAUUSD gold spot, 15 minutes on the chart. This is live market just going on right now, and I have, for sake of explanation, I have taken the data from 4th March. Time frame is 15 minutes. Time frame is 15 minutes, and we would be looking into this kind of or this portion of the chart wherein we got some trades or not. Based on what I'm about to teach and what you are going to learn in my Master Trader 21st Century Wyckoff course. So we'll begin with XAUSD. So this is how the right side, left side is the blank chart with no indicators, nothing at all. And on right side is my like application based on my teaching or what you are going to learn. So I'll walk you through on what this all is about and how you can differentiate. So to begin with, this particular chart is completely blank. If you want, you can apply indicators to it, moving averages, RSI, MACD, and whatnot and whatnot. So just for comparison purpose, I'm taking blank chart so that others won't feel that I'm not I'm comparing things like with other indicators. So having said that, on 4th, market went down, then it went sideways. There was effort to take the market down, but no result. And then after that, we have upward movement that resolved in lower high, lower low kind of formation, which enabled us to form a trend channel. And here there was a shortening of thrust taking place in terms of bars, in terms of waves. And price here, the supply got weak and demand came in early. That is the reason we had seen this kind of price up movement. So from this point, I drew this trend channel. How to not draw the trend channel and what it means and what is the effective way of drawing the trend channels would be taught in the course in detail, because this is manual market structure. Intentionally, I haven't applied my market structure indicator over on this. Neither I have applied any volume, because my intention was to show you what difference uh, this training would give you. And one more thing, there were certain people who were doubtful and skeptical whether they would be getting the same content which has been taught by international traders. So, because as I told earlier, I learned from David Weiss. So I'm following his teaching, and that's it. So here to some extent, we were overbought. After that, we went into a sideways movement. We are forming a support level at this particular price. Now, this area is of most important because we have a false breakdown that resulted, because these are all liquidity hunts area. So false breakout, and after that we got into the channel, and this was a big opportunity to get long, because failure of a breakdown itself shows a strength coming into the market. Because if this was weakness, then price would have been fallen down. And but in this particular case, uh, a supply tried itself but failed to take the market down. That means there was hidden buying taking place over here, or buy holding kind of activity, wherein large players were holding the price and they were buying all the selling which was taking place over here. So this is how I interpret it. intraday chart, and this is the buying place, either this bar or either this bar. The closer to the support is better. After that, we had some sort of uh, target booking or profit booking taking place. Again, we have came back to this support level. So now, if we see, if we consider this as to be a spring is it is basically, you can define it and define, or you can understand it as liquidity hand, wherein institutional or composite operator, they always are in lookout of false breakout and false breakdowns. So that being said, on this is in 15 minutes, but if you see this thing on 1 hour or above, you would be this would represent as a spring to you. So having said that, this is the test of the spring, and in another sense, this is a confluence, though it is the initiation point. So it would be too early to call it as an confluence zone. But this is definitely what I can assess is effort to go down kind of testing, like heavy volume testing taking place. After that, we have a successful breakout of this particular supply zone or supply area. If I use any term like zone or area, that doesn't mean that I'm talking about ICT zones, or I'm talking about smart money concept zones. Those zones are completely different. We don't deal in that. So it's pure Wyckoff, pure market structure, nothing else. So after that, what happened? I made this smaller move of smaller trend channel. After that, we are seeing shorting of thrust coming in, and then breakdown of the trend line, and then this is a supply line. This is the demand line. This is a supply line. So breakdown of the demand line, that means supply is in control, and this kind of testing phase taking place over here. This was evident. So what we are above support, which was resistance. Price is firm whenever we are trying to go upward, or price is going to upward, it is showing us strong commitment towards upside. And whenever it is coming down with some sort of weakness. So at this particular point, there was I have only applied tape reading toolkit to it, so that identifying trades and identifying the what is happening exactly within this price struggle of up moves and down moves. To assess this thing better, this tool is made. So it will increase your accuracy to 80-85% if you know, and if you practice consistently for over a period of 6 months or plus. So having said that, this is a confluence zone, shortening of thrust in terms of bars, and confluence zone, confluence zone of trend line and support, and price is holding this level. This level means this is demand line and this is supply line. Okay, after that, what happened? Price made a spike. We can say this is a speculative kind of a move, which is quite common in gold and JBP USD and Euro USD nowadays. After this spike, most of the people were in panic, like this could be a climatic behavior. But every climax and every sort of climax has to prove itself. So this was the area where it was expected to prove. but this level and this demand proved itself by pushing the market upwards. So this is how you would be able to analyze your market, and you would be taught on those lines. The reason for taking these charts in this such a way, especially for people, because many people are thinking that what we are going to get from this poor guy. You're going to get what David used to teach, and and my own tricks of trade for accumulation and distribution, and then some setup identification things when it comes to market structure. And moreover, I'm myself programmer of fine script, so you're going to get a lot of goodies from my side. So as far as the course is Wyckoff method is concerned, I know in and out, and I'm practiced it for 15 years. And let's once you join the course, you will come to know more about how I trade and how basically I plan my trades. So now for Euro USD, I have come up with this new thing, speculative bar. I'll talk about this one briefly, but I talk about this one in detail in my course. So in for Euro USD, we are considering a sample time frame of 5 minutes, and somewhere here I have started my drawing. This is a downward move, upward move, up thrust, then the downward move. Then from this point, I drew a resistance level. As we were look closely, as we were approaching, actually, quite adjustment has to be done when we are explaining on live chat, because when it is in PPT format, that is static, but we have to keep on changing things from here and there. So there was shortening of thrust from this point to this point to this point, and then after that we also had a up thrust, a very beautiful place to short. Moreover, we are overbought on the channel. So three things in our favor, and that help us in taking a short selling decision at this particular point. So this is a short sell trade, and after that price went below, and this support was broken. This support was broken. Again, we had a beautiful trend channel showing us some overbought kind of thing, or oversold kind of a thing. Sorry, I beg your pardon. This is support for taking place. Spring, heavy volume test of the spring. So in this case, especially in this scenario, this is the best place to buy, and this is the best place to buy, because you're buying on the near the danger point where your risk is minimum, and let the reward take care of itself. So when market, this is oversold and spring. So as we approach the resistance level, same thing happened. We are identifying as so shorting of thrust. Again, we are overbought, and we are having an up thrust. And this is a beautiful test of the up thrust. So this all adds to the story that this market has no whatsoever potential to go upwards. So that's the reason, if you are not short here, at least with a stop here or here also. So this is how we reach this target. And after that, again, shortening of thrust. This is a different kind of shortening of thrust. Mostly people consider that this is shortening of thrust, this is shortening of thrust. But what about this one? What about this up bars? So if you try to analyze shortening of thrust in terms of this one, then there is no shortening, there is expansioning of the thrust. So for other people, they might feel price might go lower, but if you apply the context with the support being held every time we are going down, very next or on the same bar, we are getting a close above this level. So this adds and this helps and it tells us that buying is in control. So, and this kind of spring of this particular level, though already we had heavy volume test of previous spring, so this is all accumulation taking place. So now many people ask me, would you be teaching us of what is like accumulation phase analysis? Accumulation phase analysis, phase A, phase B, C, D, E. So those phases are all meant for, I'm repeating my say, it accumulation is nothing but exchange of hands taking place between supply and demand. And distribution is something wherein demand is exchanging hand with supply. So this transition you have to identify, and I'll help you in identifying those transition, because if you only want to follow, only want to learn schematic, and I bet you, like I give you guarantee, you will all the schematic will fail, and that is for sure, 100%. Because I'm a Wyckoff student since 16 years, and I've tried many things, many ways to apply all the things of Wyckoff as they were uh, prescribed by Wyckoff himself. But as phases change, time is evolving, and technology is coming into picture, and we are using time frame bound charts. So it is very difficult for everyone. But if you understand what is distribution, you will be easily able to understand and catch whatever is going to come. And if you want to understand the analogy and the mechanics of accumulation, you will be taught how to do this thing. And as far as phase analysis is concerned, if you are fond of phase analysis, I'll give you one trick which will help you in determining whether you were into accumulation or distribution phase. That would be covered in the later part of the training course. Then this is a speculative bar. Speculative bar is a bar wherein out of nowhere, though we have a context in background that prices are going to go higher, but we never knew that this much of price appreciation was expected. But having said that, whenever this kind of speculative bar takes place, the speculative bar means any ultra widespread bars or candles or price movement which is very fast appears on the chart out of nowhere without any context, and it gives a shift or it halts the market for some or for set duration, whatever duration the particular bar is of. So and after that we have a normal trend movement taking place. So this two factors defines this is a speculative bar. So always try to stay away from this kind of scenario. This always have seen in when we are having New York session opening. So nowadays it is happening in UK session as well, or Asian session or Tokyo session as well. So don't take it as a climatic behavior, because there are many nuances to be taken into consideration for uh, identifying it as in buying a climax. Rather, to some degree, you can call it a stopping volume, but again, for stopping volume, there has to be some move. So this was Euro USD. Now I'll come down to Nifty. I have done, yes, for Nifty, I have taken 1 hour. Okay. So for Nifty, this is Nifty's uh, index. The Nifty 50 is like it's an index of Indian um, top 50 companies. So this is for Indian traders. Though this method, the things which I'm about to teach you, will work on any damn good market. Don't like if it is traded fairly and freely. Here you can see shorting of thrust. This was a beautiful buying opportunity. Buying initiated from this particular point. A buying opportunity called a confluence trade. Resistance getting converted into support. And if you see this thing, I'm not talking much more about uh, tape reading toolkit, because that would be taught in the course, how to make better use of this thing and how it can facilitate your analysis. This side is candlestick, this side is bar analysis, and my entire course is into bar analysis. So having said that, this is shorting of thrust that led to a breakdown of demand line, and this was the result. And from this particular point, if you see closely, if you watch closely here, sorry, my bad. We are, this was a breakout. We are testing this breakout, and we got a reaction out of it. And then this is a shortening of thrust again taking place. So let me zoom in so that we can also see clearly. Because in live chart, it is quite difficult to crop all the things together. So this is the shortening of thrust taking place. After that, we have testing taking place, and this was a place to place initiate your sell trade. This was a test, and then downshift goes stopping volume kind of thing as prices moving upwards. This is a more kind of a stopping volume and shorting of thrust in bars, as well as stopping volume and up thrust. So we have three things, three evidence collected in our favor that this market is going to go down. So that's the reason price went down. As we were price were approaching this support, we can see shortening of thrust, spring, then test of the spring, shortening of thrust in bars, stopping volume and spring. There might be instances in the market wherein prices will come back for testing one, two, or three testing, or sometime more also, sometime more also. So it depends. So this is how you all would be trained. So the intention of taking this, recording this video is to make you people aware that what you're going to learn is a real stuff of Wyckoff, which is applicable in entire market. You can apply it in any instrument, and this is much more advanced and there we don't rely on any lagging indicator. The indicators which I have programmed, I'm giving away in this course are all facilitating Wyckoff. They are purely based on demand and supply. So please do watch this video. From tomorrow, or tomorrow or the after tomorrow, I'm starting my batch for Indian and international students. So if some people are having issues issue in attaining daily, they can go for a weekly batch, because on Saturday and Sunday I'm planning to take one session, two session or one session each. So this is how your transition would be from this side to this side, wherein you would be well versed with what you're doing. I'm not talking about winners and losers and what risk to reward, what kind of trades you would be getting. But once you come to this side of the chart or this side of traders, at least you will be in a better position to understand if I'm buying, what is the reason behind, and if I'm short selling, what is the reason I'm behind short selling, and if I'm exiting, why should I exit, and if this market has potential to move upwards or downwards, you should have a logical answer why it is doing so. And I don't teach any fundamentals, and I don't trade based on fundamentals. I only trade based on Wyckoff, pure Wyckoff, price, volume, demand, supply. So thanks a lot for watching this video. If you want to join the batch, you can do so. But tomorrow or the day after tomorrow, you can do the registrations, and you have this brochure with circulated among yourself. The same course which I'm going to teach you is normally charged by like minimum $1,000 or $2,000 is the charges by some traders, and most of the time there are many traders who are not teaching this thing. So I'm doing this on, like, for international traders I'm charging $260 and 21,540 for Indian traders, just to help and do a smaller contribution into a trading fraternity, because everyone cannot afford this much of fees, and for them there is this kind of paying like this much of an heavy amount doesn't make any sense. So thanks a lot and bye bye. If you have any concern, if you have any doubt, there is a Telegram link in the description, or either ways you can comment below. Okay, bye bye.